In the uranium space, I think it's going to be one of the most vicious to the upside bull cycles that we've seen ever. I think that plays out in the next 12 to 18 months. Maybe I'm wrong. Maybe it plays out in the next 24 to 36 months. Either way, that's going to be a fun ride that you want to make sure that you're positioned for. In the lithium space, again, we have strong fundamentals all the way to at least 2032. It's a decade. Talking a decade-long bull market where you're going to have a phenomenal window to really make some money in this space if you can choose carefully, right? And so lithium has phenomenal fundamentals.
When faced with economic uncertainty, it's important to have the right plan to protect your wealth. Build your financial strategy using exclusive insights from globally respected economists at the 2022 StockPulse Silver Symposium, August 30th and 31st. Engage with a community of investors and claim valuable silver bullion prizes. Share in thought-provoking discussions on how to counter today's inflationary environment. Invest in your financial future today.
All right, welcome to Inside the Markets, flagship podcast at StockPulse.com. We're going to do a little junior mining talk today with Gerardo Del Real here from Resource Stock Digest and Digest Publishing there with Nick Hodge. And Gerardo, I appreciate you taking the time. We haven't spoke, I guess, on camera before, but junior mining sector is a little bit of a tricky one here. And I thought about you here when I wanted to talk some shop here. So Gerardo, I appreciate you taking the time.
Thank you so much for the opportunity. Happy to be on. Great to connect formally and publicly.
Yeah. So I guess let's start back at the playing field, I call it here. What do the conditions look like here? You've got gold and silver, I think, relatively strong considering a lot of the junior miner charts look off here.
People are sleeping with gold and silver, Rob.
Yeah, right. So get us into something here. Lithium's exciting. There's all kinds of things. So you cover kind of the whole gamut here. So what looks interesting to you?
You know, it really depends on your timeline, the anticipated return, and your risk tolerance. So let me preface my comments by saying I have a higher risk tolerance than, the average junior resource speculator. Fortunately for me, there's multiple revenue streams. And so for me, when I look at an opportunity, I'm looking for 10 baggers every time, right? That is my approach. I don't recommend that approach for everyone. So I'll start by saying that I'll explain to you what's attractive to me, but I want people to understand kind of why I am wired the way I'm wired as it relates to the approach. Now, with that being said, I did the fake yawn with the gold and the silver thing because I feel like the gold bugs are really, really bored and frustrated with gold and silver right now. And I would counter that if you have a timeline of 6 to 12 months or 12 to 24 months, gold and silver, it's going to go well for you, but you have to be a stock picker at this point. Gone are the days where you could just buy a basket of juniors and wait for the rising tide to lift all boats. Those days are over, folks. It's the same in the crypto space, and I'm no crypto expert, but I think a lot of people learned this year, you better know what you're doing, and even knowing what you're doing can get you a 50% haircut really quick. Ask the Bitcoin folks. Also, ask the folks that bought Newmont 4 or 5 months ago, right? And so when we talk about risk and we talk about returns and we talk about reward, I wrote an article, I think a week or so ago saying, for me, it doesn't make sense to take a 50% hit on a stock like Newmont when I could buy another stock that maybe gives me a 50% hit, but if I'm correct about where it's going, maybe gets me a 5-fold or a 10-fold return. And so I swing for the fences on my picks. I like to buy when no one is looking. I think gold and silver are phenomenal bargains, especially the juniors, if you have the wherewithal to be bored for a little bit and let the cycle kick in and catch up. That's the caveat for most people. They don't have the patience to wait for things to turn. So, there's companies that I've been picking up at 3 cents and 4 cents and 5 cents. And I'm very confident that this time next year, just on a better sentiment, those companies will be 25, 30 cents. And if they do anything worthwhile between now and then, if catalysts actually materialize, those are stocks that I'm confident can be 50 cents to $1. Do I mind waiting and being bored for a year or two to get a 10-fold or a 20-fold return? Absolutely not. But again, everyone is different. What do I like right now for those of you that are impatient and those of you that want returns now? The lithium and the uranium sector. I think the fundamentals for both are as good and as solid as I've ever seen them in my career. I've been doing this maybe 14 years or so now. And when I talk to mentors of mine and people that have seen multiple cycles, they echo the same sentiment. So if you're bored with gold and silver, if you don't want capital to sit there and you don't want to be a contrarian and you want to buy into sectors that have overwhelming bullish fundamentals, the lithium and the uranium sector for me is the place to be right now. I would say two of my three largest holdings are lithium and uranium plays. And so I've done very, very well. I've had the best year of my investing career this year at a time where most people are looking at 40 and 50% haircuts in their portfolio. And it's largely because I reallocated capital in the beginning of the year, heavily weighted towards lithium and uranium plays. And, the lithium plays have done extremely well for me. The uranium plays have done well, not on par, but it's warming up in that sector as well. And I think, again, if we have this chat this time next year, we're going to be looking back, just, wondering why we didn't buy more in that sector. So, I mean, that's a long-winded way of saying, I love the resource space right now. I love copper. I love lithium. I love uranium. And as a contrarian, I love the gold and the silver juniors. You just have to pick your poison and you have to define those timelines.
Yeah. So I guess we've established the fact that you're a bit of a riverboat gambler. I think I see the same with you there. If you're gonna take a shot, you might as well take a shot on something who can get you somewhere. So let's talk about how we find these companies, because this is a maze here that not many can pierce. I mean, this is a low rate of success, but yeah, you're having a good go of it here. So without giving maybe all your secrets away, we give a few away.
No, look, I think I'll talk my own book a little bit, right? Nick and I co-own a website, a media company, and the website being Resource Stock Digest. There's at any given time 40 to 50 clients of companies that we've vetted that we believe are quality stories with quality management. Do all of them work out? Absolutely not. That's not the way it works in this space, right? But we do believe that those are stories with merit. Those are management teams that we're confident in. And, if Mother Nature is kind, you can do very well. So I would suggest that platform for free research, free guidance. There's exclusive interviews with CEOs and, people much smarter than I in the space that you can just press play, listen for 10 minutes. Maybe you'll learn something, maybe something sticks out, and then use that as a platform to kind of, further your own research. So what do I look for? My biggest win this year thus far is a company called Patriot Battery Metals. We helped finance it at 16 cents. It had a 25-cent warrant. That company's trading for $4.40 today, right? It's been on a phenomenal run these past 12 months. What attracted me to the company at 16 cents? It had multiple lithium projects, and it also had a gold project that I still like. The projects had scale, especially on the lithium side, and I was looking for more lithium exposure. At the time, the company was relatively unknown, and frankly, we weren't sure if the lights were going to stay on as it existed in its form then, right? And so it was drilling out a gold project. I was really excited about this lithium project they had, and the CEO and I had some conversations, and he said, "Well, look, Gerardo, I want to raise some money, and I want to use some of that to pivot towards lithium." And he did so brilliantly. Blair Way did a brilliant job of kind of turning that ship around. And so, fast forward here a year later, the stock's up some 2,600%. And I think it's just getting going. I think that can be a $10 stock by the end of the summer. I think it might be a $20 stock this time next year. And the reason I say that is because it's on to what I believe may end up being the largest lithium discovery in the past 2 or 3 decades. It's on to an absolute monster. It's a district scale play. So the scale of the project attracted me. The commodities it was exposed to, lithium and gold, more specifically lithium, really attracted me. I've known Blair for about 14 years. I think the length of how long I've been doing this, I've known Blair. Blair was one of the first people that I met in the business way back during the rare earth craze, which I also did very well with, right? And so I know that he had a history of being able to vet these projects. I knew what he looked for. I know how he develops them and how methodical he is. And so look, does it always work out that way? Absolutely not. It's never going to work out that way every single time. But one of those can offset 4 or 5 tough picks, right? Or a tough bear market, or a consolidation in the gold and the silver space. And so definitely look for scale, definitely look for catalyst. definitely look for teams that know what they're doing in the space that they're doing it in. I don't want someone that's never developed or discovered a gold deposit heading my gold company that I'm betting my savings on, right? I want somebody that has shown me success in the past, that knows what they're doing. And it's going to be very important moving forward. And I think a lot of people are learning this the hard way, to vet the jurisdiction that these companies are in, because you take enough risk geologically, market sentiment wise, market psychology wise, to also be gambling with risky jurisdictions. So, it's the jurisdiction risk is a lot like real estate. It's very local, right? You can't just say real estate is down. Well, not in Washington State, not in Texas where I am, and more specifically, not in Austin or anywhere nearby. Real estate is booming here, right? And so it's very local. It's the same with jurisdiction. There's parts in Mexico that I won't write a check for companies in. There's other parts in Mexico which I absolutely love. And if I know the company and I trust the asset, I'm writing that check and we'll sit it out. And so those are some of the bullet points that I go through and the boxes that I need to check before I write a check or before I allocate, my hard-earned capital into the space or into a company.
Yeah, so I guess for those who don't have a DeLorean and a flux capacitor to go back and grab a Patriot there, let's find the next one here. What's kind of looking good here with the conditions you just laid out?
High risk, high reward, and I'm fully biased. I was picking away at this company at 3 cents with 5-cent warrants earlier in the year, but it turns quick. Nevada Sunrise Gold. Now, don't let the name fool you. And again, I'm biased. This is my second largest personal holding, Patriot being my first. So let me qualify that first. But Nevada Sunrise Gold was a company much like Patriot. Weren't sure if the lights were going to stay on. I've known the CEO for quite some time. I've written checks for Nevada Sunrise Gold, I think for over a decade now, right? I've done very well with it on and off for almost a decade. And they have a 20% interest in a gold project in Nevada called the Kinsley Mountain Gold Project. It's what initially attracted me to the company. Much like Patriot had the gold project that also, was attractive as well. Kinsley is a great asset. Copar Minerals owns the other 80% of it. Those guys and gals are amazing at attracting capital. They're amazing at, developing targets. And we'll see some drilling at Kinsley later this year, I believe. Putting the gold project to the side, that's kind of like the cherry on top. Nevada Sunrise Gold also had a lithium project tucked into its portfolio in Nevada. So Warren Stanyard, the CEO, reaches out to myself and a couple of gentlemen in our group and says, hey, guys, I have this crazy idea, but we own, 8 or 9 square kilometers of land that we've staked in Nevada, in the valley, and nobody's ever tested for lithium in this valley. Can we raise $1 million and can we stick a hole or two in there and just see what happens? And so what happens is, they hit this clay. The clay's running very high grades. It's the widths are phenomenal. They're on to an excellent lithium discovery, and that's all fine and dandy. That's exciting. There's nearby deposits that have similar geology that have amazing valuations, right? And so a company like Nevada Sunrise right now has a market cap of roughly 15 to 20 million, give or take a few million, right? If the company continues to hit this clay and it's able to show continuity and scale, which it looks like it's going to be able to do, and we'll know soon because it has drilling upcoming here in the next couple of weeks, it can shoot much higher. That's a company that can have 100 million market cap easily. You can do the math from 20 to 100. It's a 5-fold win. If you were buying when no one cared at 3 cents, that's a little more substantial a win, right? That's excellent. But the real prize is if they're able to find a brine deposit. A brine deposit, of course, being a whole heck of a lot easier to develop, to monetize, to sell. And frankly, there are none in Nevada. And so what got us really excited was they went and sent some samples of the water that they tapped into. And it's running lithium, and it's running high grades of lithium. And so it has to come from somewhere. It's a desert. It's a valley. And the clay is great. The clay is interesting. The clay, there's companies nearby that are developing technologies to extract the clay. And I think, a large scale asset in Nevada, like the one that Nevada Sunrise has in the Gemini project, which it owns 100% outright, is going to be very attractive to those guys and gals. But if we're able to find a brine there, that's one of those, it's off to the races. It doesn't exist. There are no comps for that. A brine in Nevada would be the easiest story to sell and one that would be a very, very profitable story to sell. So that's got some gold exposure later in the year. You have lithium exposure immediately, and you have multiple shots on goal. You can win with the clay, but man, if we find that brine, it's going to be a great Christmas.
Yeah. So I think you kind of set this up to where I see this sector as being a very romantic one. You're setting it up there for a big win. Does it always happen? Obviously not. But I guess let's talk about the mainstream investor who might just be coming across this interview. And what are you guys talking about? These mining stocks. So let's talk about the supply chain and really how important these companies really are.
Look, the bottom line is when we talk about fundamentals in the lithium space, for example, there was an article that was published a week or so ago, and it outlined how we need 50 to 60 new lithium mines to meet the demand. And let me tell you something, folks, to get and develop and permit and build a mine doesn't happen overnight. They are not going to find 50 to 60 new lithium mines between now and 2030. It's simply not going to happen. I consider myself a relatively simple guy with relatively simple premises. That one is so easy. It's such a no-brainer, that sector for me, that if they need 50 to 60 mines and we know we're not going to have them, the price is going to continue to go up. And so if you want that nice Tesla, if you want that new, 7 Series Beamer that's coming out in 2023, and you want it to be electric, it's going to require a lot of lithium. It's going to require a lot of copper. It's going to require a lot of these materials that are going to be scarcer by the day. The supply chain issues that were exposed as a result of COVID and made worse as a result of COVID aren't issues that are transitory. And I use that word very, very, very intentionally. This is not going to be a transitory issue that is resolved and magically the shelves are full again and everyone has enough lithium supply and everyone has enough copper supply. It simply isn't going to happen. Prices are going to rise. Companies that are on to discoveries that can actually build these mines are going to get bought out at a premium. And so I like to put my eggs in baskets that have, political support if possible. It doesn't get much better than the lithium and the uranium space when it comes to bipartisan support. We just passed an act here in the United States that invests hundreds of billions of dollars, right, into clean energy. That's going to affect the bottom line when the M&A that I foresee coming in the lithium and the uranium space really kicks up. And so sometimes with gold and silver plays, time isn't your friend. You get a bear market kicking in, the markets overall turn. With lithium and uranium, the fundamentals get better for me every single day. And so I am allocating a lot of my capital in those spaces right now, with exceptions, of course, because I still love the gold and silver sector. I think, ultimately the deficit issues and our fiscal policy and our monetary policy, which is the most insane experiment that I've ever not just seen, read about the most insane financial experiment I've ever read about, right? It'll eventually implode and the system will have to be reset. We'll come to a new Bretton Woods type agreement, and it's going to involve gold because it's going to be one of the few assets that will still retain any of its confidence and its value. And I think people will demand it. That could happen 10 years from now, could happen 20 years from now, could happen 3 years from now. I don't know when it's going to happen. I'm not that smart, but I know it will eventually. So I have gold. I have gold equities. I have some of my favorite juniors. But the lithium and the uranium space, time is my friend. And every day I don't get smarter. I just look smarter because every day the fundamentals get better for me. So if you can pick them halfway okay, the lithium and the uranium space, a rising tide is going to lift all boats in that sector because anything with the name lithium is going to look good for a while. I'll caution that you're going to get a lot of the promoters and the people that romanticize the space coming in and creating companies out of nothing and just attaching the name lithium or uranium at the end of it. Vet the assets that you're investing in, vet the management companies. Everybody in the space, that's anybody, can tell you who the real management teams are that are looking to build real companies versus who's just promoting something. Not to say that there's anything wrong with making money off of promotion or making money off of, an idea, but there's better ways to allocate capital, I think. And there's real companies that do deserve the praise and the promotion, and nothing wrong with promoting. I'm as big a champion on my holdings as anyone else, or I wouldn't be writing checks to these companies. But there is a difference between, a Corvette lithium district that Patriot has and some of the fly-by-night area plays that are now popping up that are all looking for pegmatites because now it's an easier story to tell.
Yeah. So I guess let's fast forward a little bit here. Maybe I already lost my hair here, but how long is this commodity bull going to run here? I know gold and silver's kind of taking a breather, but in all honesty, it's a pretty good level here. Most of these companies are just fine with that level. These explorers obviously are the ones that are going to be undercapitalized. But is there, I guess a two-part question. Is there too many companies in the space to partake on this run, or will this run maybe allow most of these guys to keep going?
It depends on the commodity. In the lithium and uranium space, I think, the cream's going to rise to the top. But look, with uranium, there's only two handfuls worth of companies that are, that merit your capital. You're going to get hundreds of companies that pop up. And frankly, most of them will do well if, my uranium price prediction that it's going to overshoot to 200 in the next couple of years comes to pass. I sincerely believe that if we look at the last uranium bull cycle, right, it went from something like $10 to like $140, $150 in pretty short order. And so this go around, the fundamentals are better. The politicians love it. Even Germany's doing an about face and a pivot because it's going to be a cold winter in Germany, the way it was a really hot summer, and they're being forced to pivot. It's literally a matter of life and death over there because of, obviously everything going on geopolitically and frankly, lack of planning by a region that should have saw this coming and just didn't prepare for it. So in the uranium space, I think it's going to be one of the most vicious to the upside bull cycles that we've seen ever. I think that plays out in the next 12 to 18 months. Maybe I'm wrong. Maybe it plays out in the next 24 to 36 months. Either way, that's going to be a fun ride that you want to make sure that you're positioned for. In the lithium space, again, we have strong fundamentals all the way to at least 2032. It's a decade. We're talking a decade-long bull market where you're going to have a phenomenal window to really make some money in this space if you can choose carefully, right? And so lithium has phenomenal fundamentals. Gold and silver, you're absolutely right, Rob. I'm more hesitant on silver producers because it's a little tougher to be profitable at these levels because of how volatile it can be. And frankly, there's not a lot of pure silver plays that are worth allocating capital towards. And also, why would you want to? Why would you not want to allocate capital to a gold and a silver play? Silver as a byproduct or, something along those lines to get exposure to both. But when I talk about a monetary reset and I talk about a global financial system collapsing into itself, gold has to play a part in that. And so does the gold space consolidate at this level for another 3 months or 6 months? Very possible. I thought we'd be at new all-time highs by year end, and maybe that still plays out, but maybe it doesn't play out. Maybe I'm wrong and we're at new all-time highs by next summer. I'll still do very well if that's the case, right? And then I think once we get there, then it's all market psychology. I think that bull market is going to run, for 3 to 5 years before we get this monetary reset and things are on stable footing again. But it's going to be volatile. It's not going to go straight up. I love what gold's done in the face of a dollar index that recently flirted with the 110 levels, right? I mean, you're talking 40-year highs. And so for gold to be stable at right around the $1,800 level is a phenomenal preserver of wealth. It's done exactly what it's supposed to do. What people are upset about it is that it's not at $5,000 and a lot of people put a lot of the eggs in the gold basket. That's really what people should say when they complain about the price of gold. Why did I allocate so much of my capital in the gold space? Everything's playing out the way I thought it would, yet I don't have new all-time highs and my stocks are down. It's coming. Just be patient.
Well, that's encouraging words there for a lot of these guys, and I think you're hitting the nail on the head. They're waiting for that number. Why the capital's not in here yet? Those a little intriguing to me. But these guys are the absolute supply chain. I've always said if the truckers and the miners got together on a conference call, they could end the world real quick.
Absolutely. Absolutely. We saw what a couple of upset truckers were able to do here recently on both sides of the border, right? And so imagine that on a coordinated basis.
Well, Gerardo, lay out your model again. I know you said there's all kinds of companies there that you've vetted and talked to there. Lay out your Nick Hodges operation.
Yeah, no, look, I think if you're looking for quality, we try to provide quality stories, quality content via exclusive interviews, via news releases. We have editors and writers that are excellent at what they do that write for us as well. You can go to resourcestockdigest.com. It's a free website, sponsored business model. Companies pay for the exposure. We try to contextualize their content and we try to present it in a way that's understandable to everyone. And so that's a great free resource for people to go and get information, start listening to some of these conversations. The other thing I would encourage everyone is don't be afraid to spend a little money and go to these conferences. Right. Nick and I will be at the New Orleans Investment Conference here in October that Brian London and his phenomenal team put on every year. We'll be presenting there. And, it was my first exposure to the sector way back in the day, 2007, 2008-ish was spending money on a plane ticket. And mind you, I didn't have a lot of money to spend, right? I had a little bit, but not a lot. And, buying the hotel room and flying out there and paying to get into the conference, but it was so informative. The lineup of experts that give you, not just specific picks, but great macro takes, right? Great global perspectives on everything from real estate to hard assets to specific stocks was invaluable to expediting my learning curve. So I would encourage people to also do that. The last part of our operation, of course, is digest publishing. So, we provide research and insights into different spaces. I have my services, which focus, of course, on the resource space. I'm very resource specific. Nick Hodge is, he's a master of all there. He's sector agnostic. He goes where the puck is going and wherever there's a dollar to be made, and he's very good at it. And then we have a crypto expert. We have several other writers and experts that also contribute there. So that you can find at digestpublishing.com. You can pay for access to private placements. You can pay for access to Nick's publication, access to my publications. And so you have the free option with Resource Stock Digest. You have the paid option through Digest Publishing. And then again, I encourage everybody to go and check some of these conferences out. It's really worthwhile.
Yeah. And of course, we'll have our own StockPulse Silver Symposium here in a couple of weeks, and Nick will be speaking at that, and a little smaller show here in a little old Spokane, I guess. But looking forward to seeing you at some point, my friend, and appreciate the insight. I'll look forward to checking back. But I think the takeaway message here is get ready to make a lot of money.
Get ready to make a lot of money, mitigate the risk, define your timeline, define your risk tolerance. You should be okay.
Gerardo Del Real, Resource Stock Digest. Appreciate you taking the time.
Thank you, sir. Appreciate the time.